What's going on, guys? Quick video today. Very straightforward and to the point. Right here today by Ben Lane. Chase now requires 700 FICO score, 20% down payment to buy a home. Now, there obviously are some exceptions, and we'll get into this article a little bit. Before we go any further, though, please make sure you like the video. It helps out the channel a whole lot. If you are new here, please subscribe. Would love to keep growing the channel, having a whole lot of fun with it so far. So thanks for joining in. Let's look at this. So basically, they go on to list a lot of reasons with the virus as to why mortgage companies are raising their standards of loaning money. Chase Bank being one of them, JP Morgan. You can see 700 credit score, 20% down minimum, but they are still allowing some exceptions. Should be noted here that they are not doing this for all of their new home loans, but it says it should not apply for people who are low to moderate income borrowers, little as 3% down. So a couple of really key notes. The second largest mortgage lender in the country recently announced that it will require re-verification of a borrower's employment at the day of their loan is scheduled to close. So a couple of new tactics being used by lenders to further gauge the quality of a borrower. It is important to note, though, when you're looking at all of this, that the reason that they are giving behind doing these things, that they are trying to not service new customers. That's a big thing, and at least this is the main reason that most banks are giving stricter loan requirements, and that is the bank will still move forward with refis under its previous lending standards if the loan is either serviced by Chase or its Chase portfolio, and that according to Chase, the changes will allow the bank to spend more time on the loans it is working on and on the appropriate verifications to ensure the loan is right to move for all that are involved. Something that I'm hearing dealing with some of the banks for my businesses and other things that I'm involved in is that new banks are definitely more hesitant to bring on new customers, and it doesn't seem to be that they aren't able to from a financial reason or that they're not willing to, but it's more about their resources. They're spending so much time right now dealing with business loans, particularly with the PPP program, and trying to get those through with such a small amount of time, and they're having to dedicate a lot of just employee time, and also with banks being shut down, that they legitimately don't seem to have time for any new business, especially with customers who are not already with the banks. Have had that experience now with a bank that I was recently communicating with. It's going to be really interesting moving forward to see, is this a sign of the crumbling of our economy? Is it going to continue to deteriorate? Or is this a short-time thing to just get banks through this process of the uptick in volume for refinance requests, for small business loans that are trying to be requested, big business loans that are being requested and also reduced hours at the branches? Or is this a sign, as mentioned before, of bad things to come with the economy? Stay tuned to find out. I'm not sure. Please let me know what you think in the comment section below. I'd love to hear your thoughts on this. And if you have any interesting plays in the stock market, either going long or short on the market, it's going to be a really interesting couple of months to see what happens if we recover smoothly, or if it's going to be what some people are thinking, a very long road to recovery. Again, thanks for tuning in. I hope to see you here for the next video. If you haven't already, check out some other videos. And until next time, peace.